Imagine MicroStrategy as a landowner with a massive forest of trees. These trees represent the company's fiat-backed shares, traditional stock issued and traded in the market, supported by a balance sheet of fiat assets. The forest is vast, but the trees are vulnerable to decay, things like inflation, fiat devaluation, and reliance on legacy financial systems. Instead of clinging to this forest, MicroStrategy takes a bold approach, cutting down the trees or selling shares to replace them with an unbreakable fortress built of steel and iron, which are Bitcoin-backed shares. Each time MicroStrategy sells shares through its at-the-market or ATM offering, it is chopping down part of the old forest. But rather than simply holding the cash from these sales, they immediately convert the proceeds into Bitcoin, replacing perishable wood with an indestructible foundation. At first, it might seem counterintuitive. Why sell shares and dilute ownership? The key is that these fiat-backed shares were already tied to a declining system, and MicroStrategy is transforming them into something far more valuable. Once the trees are cut down, or fiat-backed shares sold, MicroStrategy uses the Bitcoin purchased with the proceeds to fortify its balance sheet. This changes the fundamental nature of the remaining shares. They are no longer backed by a mix of fiat and traditional assets, but are now tied directly to the hardest form of money, Bitcoin. Each share that remains in circulation is now structurally stronger, like a steel beam replacing a wooden frame in a modern skyscraper. The more Bitcoin on the balance sheet per share, the more resilient and valuable the company becomes. As MicroStrategy continues this process week after week, selling fiat-backed shares and acquiring Bitcoin, the company's financial structure transforms from a vulnerable wooden settlement into an impenetrable fortress of steel. The original fiat-backed shares, which we can think of as trees, are gradually removed. The remaining shares, now like steel structures, become increasingly fortified with Bitcoin reserves. The reduced float and rising Bitcoin reserves per share strengthen the company's financial foundation. Instead of issuing debt or diluting shareholders without a strategy, MicroStrategy is effectively engineering a financial fortress where each share left standing is stronger than the ones before it. With each cycle, the fortress grows stronger. As MicroStrategy sells fiat-backed shares, buys Bitcoin, and strengthens its financial position, confidence in the company increases. More investors recognize the Bitcoin-backed fortress as superior to the decaying wooden structures of traditional corporate finance. The result? A self-reinforcing Bitcoin citadel, one where each remaining share represents a stake in a Bitcoin reserve, making MicroStrategy the blueprint for future financial engineering in the digital asset era.